right, a very good morning once again, and many thanks for staying with us right here on Morning at NTV. My name is Romeo Busika. Of course, I come to you with a very pertinent conversation in the business community. Financial sector deepening Uganda, the Capital Markets Authority and the European Union have launched the Deal Matchmaking Facility, or capital investment for Uganda's medium and large-scale companies. This investment is expected to allow businesses to focus on growth. Yes, and this comes right on the heels of a budget that aims to spur economic growth in Uganda. And to speak to us, we have Rashmi Pillai. She is the Executive Director, Financial Sector Deepening Uganda, and she joins me right now via Zoom. A very good morning, Rashmi Pillai.
Good morning, Romeo, and good morning to your viewers as well. Thank you for having me today.
Indeed, second time having you on Morning at NTV, it's always a pleasure. Acquaint us about this new project, the Deal Matchmaking Facility, courtesy of Financial Sector Deepening Uganda.
Sure. Thank you for the question. The primary objective of the Deal Flow Facility, which you so well articulated, is to increase non-bank financing into growing companies in Uganda. The Deal Flow Facility is like a matchmaking. It is matching the demand and supply. So it matches investment-worthy companies to investors. It, it arose out of an issue we're seeing in the market. Companies need long-term capital to grow. However, many of them are financing this growth through short-term capital, which is bank financing. The objective of the Deal Flow Facility is to get more companies in Uganda to access long-term patient capital to enable their growth and consequently enable job creation. In terms of success, the Deal Flow Facility is looking at 40 deals over 5 years and at least 100 companies in Uganda matched to investors.
Rashmi Pillai, essentially, this deal matchmaking facility connects our, business community to the international partners to make sure that they expedite joint investments.
I wouldn't say joint investments. I would say it can be private equity, it can be venture capital. So it is investors that are domestic and international to come in and provide the much needed access to finance, whether that's in terms of debt or in terms of equity. And they're more longer term compared to bank financing, which normally needs a collateral, which normally is short term.
Rashmi Pillai, would like to know, what is the background of this deal matchmaking facility? How did it come about?
Great question. So the Deal Flow Facility, as I mentioned previously, arose because we saw that most companies are trying to finance their growth through very expensive bank financing. A lot of times what they need might be longer term equity, where you sell your shares so that you have new shares and investors who are there for a longer term journey with you. In fact, if you look at the statistics from the private equity and venture capital associations, most of this financing on the African continent is going to Kenya, South Africa, and Nigeria. While some of this investment over the past recent years has increased in Uganda, there is still a long way to go. And one of the key constraints is the fact that these investors need to find investment worthy deals. And companies need to formalize, become more, formal in terms of their governance structure, their accounting structure, their legal documentation, etc., so that outside investors have certainty that they're investing in the right kind of companies. And the Deal Flow Facility will try to actually work with companies in Uganda to help capacity build them, to make them attractive to investors, match make them to the right type of investors, and bring the ecosystem together, whether they are transaction advisors, lawyers, tax advisors. All of these constituents that are necessary for making a deal, will bring them together so that with the ultimate aim of increasing the financing to the business community in Uganda.
Of course, Rashmi Pillai, the viewer who is watching Morning at NTV would like to know, what makes the deal matchmaking facility so unique?
First and foremost, it's one of the first in Uganda in partnership with the public sector. So the Capital Markets Authority, this is a key part of the 4-year strategic plan. It is funded by the European Union, and we're grateful to them, and implemented by FSD Uganda, which has a very strong understanding of financial markets in the country. So, number one, it is unique, for the first time in Uganda. Second, it actually arose out of a very strong analysis of what are the challenges in the country and how can we use this facility to learn about the challenges and fix some of the enabling environment issues in the country. So it is not there just as an experiment and just another idea. It is there to see, as the idea grows, as we see new companies and investors come in, to help the regulators and the public sector change in order to be more responsive to the private sector.
Of course, let's also expand more on the effects of this COVID-19 pandemic on businesses within Uganda and the East African region, based on the perspective of the financial sector deep in Uganda. What do you think the impact has been and continues to be if we proceed in this kind of status quo?
So we all recognize now that we are in a long pandemic. However, that being said, the venture capital and private equity financing has continued. As you look from the reports from the PEVC deals that did happen last year, both on the continent and globally. So a lot of investors realize that the revenues are depressed and cash flows are challenged, but the fundamentals of some of these companies are strong. It is not because the company's fundamentals have a problem or their business model has a problem. It's because of an external shock. So most of these investors are looking with companies with those strong fundamentals, companies that have their acts together and are looking to scale, and they still want to back these companies.
Are there any incentives from the deal matchmaking facility to help these businesses cushion themselves from the impact of the COVID-19 pandemic?
That's actually not why the deal flow facility is set up. It's not as a cushion. That being said, it can definitely help withstand the shocks of COVID-19. So it is impossible for companies when their revenues are low to start getting bank financing with expensive collateral. This is actually the right time to get equity financing, quasi debt, investors that have different types of financing instruments that don't require 100% collateral, but are looking at the business fundamentals, that have the expertise to come in and help. And they come in with a longer time zone. They come in with a 5-year period. Some of them come in with a 7-year period to allow you to ride the wave of COVID-19 and then get back to where you were before COVID and provide the returns that you promised to the investors.
Rashmi, who are the intended beneficiaries of the deal matchmaking facility?
Number one, Ugandan companies. Medium to large companies that are at least looking at $500,000 of investment. So they are the first intended beneficiary. The second indirect beneficiary is going to be the entire financing ecosystem. The ecosystem right now is very focused on really large companies. It is expensive, and we want to create an opportunity for medium-sized companies to find alternatives to bank financing. So we want to educate all the ecosystem players to come together to find the right price, to find a big volume of companies that they can work with. So that is the secondary aim of the facility, to build the ecosystem of financing.
And Rashmi, who are the partners and also what are their specific roles?
Okay, so 3 partners. The first is the Capital Markets Authority of Uganda. The Capital Markets Authority, as I mentioned, the deal flow facility is a key component of their 4-year strategic plan that was recently launched. Secondly, the authority is also watching the deal flow facility to see the challenges with Ugandan companies, the challenges that investors are facing, in order to build the right environment so that there's more financing in the country. The second is the European Union, and the European Union is supporting the establishment of the facility and help providing the financing for the technical assistance that the facility will bring together. And the third, of course, is FSD Uganda, which is the primary implementer of the facility.
And finally, Rashmi Pillai, on the operational level, how can businesses engage with this deal matchmaking facility?
So the deal flow facility will be open for applications from all types of
Mm,
companies that are looking for $500,000 and above in financing. And this can be any type of financing, debt, equity, convertible,
mm,
commercial paper, you name it. So we are not putting any restrictions on the type of financing that will come. The way the businesses can engage is number one, apply to the facility if you're looking for financing. Number two, you don't need to
mm,
the facility will provide you the tools and applications necessary to attract investors. Everybody doesn't need to go
mm,
through them. If you're already far ahead and already are
mm,
significantly formalized or have raised funding before, we're happy to direct you immediately to investors. We are
mm,
partnering with investors who are looking for a one stop shop to see where all the deals are at one place, and it reduces their cost of even
mm.
finding the right deals. So we will be able to directly match Ugandan businesses to investors in that area. And yeah, we welcome applications in September, and we will be reaching out to the Ugandan business community to apply.
Well, besides the deal matchmaking facility, Rashmi Pillai, are there any other projects in the offing, courtesy of the financial sector deepening Uganda, that are geared towards, helping businesses stay afloat during this pandemic?
I don't want to preempt this, but yes, we are working with the regulators and several donor
Yeah.
partners to support businesses.
Mm,
We will be
mm,
hopefully making an announcement soon on something related to micro and small businesses. It is definitely in the works, Romeo.
mm,
So we are very serious and conscious about the fact that several millions of
mm,
people that are employed by
mm,
informal businesses have gone back into poverty, and
mm,
we are looking to work with a coalition of partners
mhm,
on addressing this issue.
mm, mhm. Rashmi Pillai, the Executive Director, Financial Sector Deepening Uganda, many thanks for having made the time to speak to Morning at NTV.
Thank you.
Of course, she was expanding more on the deal matchmaking facility courtesy of the financial sector deepening Uganda. But of course, we have another conversation that shall largely center around job creation with Mr. William Luemba. Yes, he's an economist with whom I shall expand more on that conversation. Uganda is actually producing some 20,000 jobs, yes, annually. But how many graduates, fresh graduates, are we churning out from over 49 universities and other institutions of learning within this country? 500,000 fresh graduates every year. How can they compete for 20,000 meager jobs on the market? Are there any incentives within the 44.7 trillion shilling budget that is going to be read this week that will go a long way in creating jobs for the young people within this country? Yes, how best can we make that switch from subsistence agriculture all the way to modernized agriculture using the parish development model? Does it have enough money or incentives in it that will go a long way in alleviating unemployment? We also do know that youth are engaged within agriculture. 58% of our youth within this country are engaged in agriculture. Do they have access to land? Do they have access to resources that will help them go a long way in actually making that switch from subsistence all the way to modernized agriculture? One of the avenues through which we can deal with the burgeoning unemployment within this country. The World Bank also contends that our burgeoning young population will increase. We are now churning out 500 to 600,000 fresh graduates. By 2030 to 2041, we shall be producing over 1 million fresh graduates. Do we have the capacity to produce jobs that will actually cater for 1 million fresh graduates every year? William Luemba is the economist with whom I'm going to be expanding more on this conversation shortly after this breather. This is Morning at NTV.